Wow, what a comeback for the market today. It completely erased all those early week losses. And the engine behind it all? Well, it was a huge resurgence in the tech trade, all building up to one massive earnings report. Let's get right into the numbers. Okay, so we saw a really broad and honestly pretty convincing rally across the board. The S&P 500 climbed just over 0.8%. You have the Dow tacking on a solid 300 points. But the real story, the one everyone was watching, was the NASDAQ. It jumped over 1.25%, as literally the entire street just held its breath for the single most anticipated earnings report of the entire quarter. And that, of course, brings us to the main event, NVIDIA. Now, during the regular trading day, shares just kind of ticked up a modest 1.4%. And really, this was just the calm before the storm, a little bit of institutional buying and some optimism heading into the closing bell. And then the numbers dropped. And the stock just absolutely exploded in after-hours trading. I mean, NVIDIA didn't just beat Wall Street's already super high expectations, they completely and utterly shattered them. So what was the driver? The real reason for that surge wasn't just about what they did last quarter. It was their stunning forward guidance. Management is forecasting an eye-watering $78 billion in revenue for the current quarter. To put that in perspective, analysts were hoping for $72.3 billion. This is just definitive proof that big tech spending on AI infrastructure isn't slowing down, it's actually accelerating. The entire stock market held its breath, waiting for NVIDIA's numbers, and Jensen Huang just handed them an oxygen tank. But, while all eyes were glued to microchips, a very, very different kind of company was staging an incredible rally of its own. So let's talk about Cava. The fast casual Mediterranean restaurant chain just skyrocketed over 26% today. I mean, look at this chart. The technicals are stunning. A massive breakaway gap on incredible volume, launching the stock to brand new all-time highs. So what was the driver here? Well, while the whole market was obsessing over AI, Cava just went out and delivered a flawless quarter, topping the $1 billion mark in annual revenue for the very first time. It's just proof that even in this totally tech-obsessed market, perfect execution in the good old-fashioned consumer space is still heavily rewarded. It's such a powerful reminder, right? While investors are obsessed with artificial intelligence, you can still make $1 billion just by selling really good hummus.
So the street is rewarding execution, not just hype.
Exactly. Okay, now for our cautionary tale of the day. Because, not everyone got to enjoy the rally. Lowe's served up a really stark warning from the housing sector. So Lowe's became the latest victim of what we call the guidance trap. They actually posted a better-than-expected profit for the last quarter, but, and this is a big but, that good news was completely overshadowed when management issued a remarkably weak forecast for the rest of the year. It's a classic signal that future pain is going to outweigh any present performance. And that weak forecast led directly to this, a 5.6% drop. It was one of the heaviest drags on the broader market, actually. The CEO was pretty explicit, citing a deeply pressured housing market. With mortgage rates staying this high, all those big-ticket remodeling projects people were planning, they've completely dried up. The message from Lowe's is crystal clear. Until mortgage rates drop, the only thing homeowners are fixing is their budgets. In this market, what's coming next is trumping what just happened every single time.
Got it. So guidance trumped the actual earnings.
All right, let's wrap this up and get you set for your morning meeting. Here is exactly what you can say to your colleagues and clients tomorrow. On NVIDIA, your line is this. NVIDIA's $78 billion revenue forecast is the ultimate talking point right now. It completely validates a heavier weighting in the semiconductor sleeve. If any clients are worried about AI fatigue, this print is the perfect counterargument. It just proves that capital spending supercycle is still heating up. When it comes to Cava, you can say Cava jumping 26% is a great reminder that the consumer space isn't dead, it's just highly bifurcated. Flawless execution in the physical economy still commands a massive premium. It's a great, really easy to understand story when you're talking about mid-cap allocations. And finally, on Lowe's, the key insight is Lowe's dropping almost 6% despite beating earnings is exactly why we have to be so selective with housing-adjacent names right now. The DIY consumer is officially tapped out. That's a fantastic stat to drop when clients start asking about real estate.
So, NVIDIA just forecasted a massive $78 billion in revenue. Is this the ultimate green light to buy more tech, or are we officially in a bubble?
Comment below and subscribe to Market Fluency for your daily edge.